Bring on board Vaibhav Sanghavi, CEO, ASK Hedge Solutions, joining us this afternoon to give us a sense of how he's viewing markets. Vaibhav, very good speaking with you and good having you here. Let me start off with how you're looking at or how you're positioning yourself in a market like this.
Yeah, I think, what has been happening, everybody knows, right, in terms of the geopolitical conflict which is going on. Now, because of which, few things have happened. One, of course, from an expectation standpoint, we are seeing that interest rates expectations, are going or kind of hardening from here onwards from a global standpoint, which means that there is likely to be some amount of pressure from an overall risk assets perspective. Now, till this situation kind of stabilizes, we will continue to see, elevated levels of volatility, and probably once some kind of development on the positive side kind of happens is when we see a sharp reaction up. Now, why I'm going probably in this background is clearly that from a portfolio positioning standpoint, from our perspective, we are a long short fund. We are kind of pretty neutralish at this point in time and kind of low in terms of our deployment, purely because we do see, a possibility where once things kind of stabilize, then there is a possible recovery which may happen pretty sharp. Till the time we will continue to see, pressure on the benchmark indices, and especially on those kind of stocks which are heavily owned from an FPI standpoint as well. So that is how we are looking from a market standpoint, which is very immediate term and a shorter term. And a longer term perspective, I think we are at a levels where the valuations are starting to become pretty attractive. So from a longer term perspective, like a 3 to 5 year kind of horizon, I think investments probably make a lot of sense, especially at least in parts at every declines.
Vaibhav, would that be? So let's talk long term first, because that's where you seem to be more convinced with regard to the story. So what part of the market are you finding value in from a long term perspective?
See, I think when you look at sectors, right, I think India being a structural consumer story, consumers always come on top of our mind in terms of consumer discretionary followed by staples. At the same time, with the government push, which we have seen from the last 1.5 years, I think this is a story we will continue to kind of develop at least in the next couple of years. With respect to industrials, cap goods, I think there also the valuations have corrected. Of course, from an absolute perspective, they are still marginally expensive, but that only tells the upcoming, build up in terms of opportunity which is there, especially on the data centers, which we like as a theme. So anything to do with the data centers from the whole supply chain perspective is something which we are very, very bullish on. Lastly, I do see pockets of opportunities in the banking space, continue to do well. Again, there the valuations have corrected. The books are pretty much, in check, especially on the NPA cycle. So I do think that this space can offer some good growth, given where these stocks have beaten down already also. So all in all, I think bullish on all of these kind of sectors going forward, especially with the view of 3 to 5 years.
So within the entire data center theme, in the entire value chain, where is it that you're finding opportunity? Because right now the most obvious ones seem to be the realty plays, which are now, using land as the opportunity to build data centers. But within the entire stack, where is it that you've identified opportunities?
See, from our perspective, I think when we talk about data centers, it's not land, but to be very honest, from the equipment makers or equipment suppliers, including the infrastructure build out. Now, what do I mean by that is the cooling solutions company is something that you can look for. The switchgear companies, which are transformers, and last but not the least is the power companies. So all of these set of companies are something which can give you a structural opportunity from a longer term standpoint.
Okay, interesting. I wonder, Vaibhav, where do you sit on where the IT argument is concerned from a medium-term perspective? Do you believe that the IT companies can actually come out trumps on the back of everything that's playing out?
See, IT sector, to be very honest, from a technical perspective and a price perspective, I think they have corrected a lot from the tops or from the highs. The valuations, also are now looking from a free cash flow yield perspective, much more appealing. Having said that, I don't still see, the confusion or probably the, I would say, we are not able to, declutter the overall environment in which the AI is kind of, likely to be the path clearer, for this sector perspective. Now, why do I say so? Is basically on one side you will see revenue pressures kind of coming, because of incorporation of AI in the short to medium term. But from a longer term perspective, the software companies would be equally important to implement the solutions on the enterprise level as well. So, many things moving around the sector still. It is just that because of the price deterioration which has happened, it can give you some technical bounce going up. But we will, wait to see with it how the sector kind of shape up probably in the medium term. So at this point in time, just staying away from the whole sector.
Opportunity within banks. Sure enough, the valuations have corrected quite a fair bit, and they are perhaps the cheapest opportunity within banks as compared to some of the global peers. But again, within PSBs and private banks, any particular preference?
So I think at this point in time, looking at where the bond yields are, probably private banks are a little more preferred as compared to the public sector banks. Having said that, one caveat only is that you have to understand that the FPI ownership is largely into private banks as well. So till the time the foreign selling kind of continues, you will continue to see some amount of pressure there. But these are all shorter term technical factors. But when we look at a 3 to 5 year perspective, I think the book value, the price to book, have come to such a level that along with the much better credit growth and return on equity profiles, I think that is a space, in my view, is likely to perform much better than the market in the next 3 to 5 years.
Okay, thank you so much for coming in and speaking with us and giving us that perspective, Vaibhav. We'll let you go on that note. And viewers, what we'll do is slip into a very short break. We'll continue coverage on the other side.